Later on. Julia, I wanted to get your thoughts on the market, in particular from a technical perspective. I mean, we go a couple of negative sessions, people start looking at support levels for our market. 49.50, one that's well, actually well below that actually, but in terms of support levels to the downside, what are you eyeing?
Well, James, earlier on this week we came up to test that 50% retracement of that low that we saw in 2009 from the all-time high of the market in November 2007, and that stands at 4,986 points. We've tested that a couple of times in the past 5 years and failed at that mark, and we are currently seeing a bit of a pullback from that mark. Today the market down by 0.5%. It's actually the biggest loss that we've seen in about 4 weeks, but having said that, that's because in the last 20 sessions we've only seen 5 sessions where the Australian market has seen a loss. So today was one of those. But if we have a look at the top 20 blue chips on the market, split evenly, we saw 10 up, 10 down. If we have a look at the ones that did well, Woolworths and Wesfarmers were up, which saw the consumer staples area, the best area on the market. There were some big moves in the financial space. We saw Macquarie down by 4.1% after its operational update. But outside of Macquarie in the diversified financials, we saw Suncorp up by 2.2%, and we also saw AMP up by 1.3%. But the tipping point was through the big 4 banks, most of those trading lower with the exception of ANZ, and the financial sector down by 0.3%. There are really 2 main things that we were watching on the market today. First of all, we saw the first rates decision of 2013 and rates on hold just as the market expected at 3%. But also we saw the Chinese services PMI coming out for January, and this one rocketed ahead. We saw a reading of 54, and that's compared to a reading of 51.7 in the month of December. So a huge jump in January. So that's a positive in terms of China, which is trying to stimulate domestic consumption. And then, of course, earnings season. Cochlear, Transurban, Navitas, the 3 we were watching today. Cochlear was down by 9.3%, Navitas was down by 1%, and we saw Transurban up by 1%. Tomorrow, the 2 key stocks to be concentrating on are Primary Healthcare and REA Group. They come out with their half-year results. Primary, we're expecting $79.5 million. Now, this is a stock that is up around about 50% in the last year, so some high expectations going into this particular earnings, especially seeing that it's been seeing record revenues quarter to quarter. And REA Group, we're expecting to see a profit result of $48 million. This stock is up 62% over the last 52 weeks. So 2 stocks that have performed very well, but going in with some high expectations for their half-year results.
Julia, what about the performance of some of the retailers, the discretionary retailers today? I mean, you've got the likes of Myer closed up 1.6%, Harvey Norman up about 2%, JB Hi-Fi had a pretty good session. We were talking to Ben LeBrun just in at the close. He was suggesting maybe some in the market looking beyond the current turmoil and believe maybe a better outlook through 2014 and looking to jump on board now. Your thoughts on, are we starting to see a bit of change in sentiment around some of these retailers?
I think we're starting to see a change in sentiment around the cyclical stocks. Now, the expectation is that in FY13 we're still going to see relatively weak earnings coming through. But as you mentioned, we are expecting the cycle to turn at some point in FY14, and we know that the market moves faster than the economy, so it tends to move about 12 to 18 months ahead. So the market really quite forward-looking, and we've seen a good uplift in some of these cyclical stocks. We've seen it in the retail stocks, we've also seen it in the media companies, and we've seen it even in the mining services companies with that recovery that we've seen in commodity prices. And this is a key theme to be watching out for in the earnings season. While we may see weak FY13 earnings, the market really is expecting to see an uplift in terms of FY14 earnings. That's a key reason why Macquarie Group is one stock that's been running ahead quite quickly. In fact, if we have a look at Macquarie Group, and if I can just bring up a stock chart because it was such a big mover on the market today, this is a 1-year chart for Macquarie Group. You can see the stock's been running hard, and it's been running hard on expectations that number 1, we'll see an uplift in corporate activity and capital markets, and number 2, that we'll see an uplift in terms of market activity. Now, we've slowly started to see the seeds of that coming through, but we're not going to see it for a while yet. But you can see that really the market has run ahead of it, the actual event happening. Today, some of those expectations watered down, especially some of the commentary around the capital markets, and with that growth forecast of 10% being below what the market had predicted and consensus, we did see the shares down by around about 4%. But this is a theme that we are seeing emerging on the Australian share market, where we do expect the current financial year earnings to be weak for a lot of these cyclical companies, but we do expect a revival in the next financial year.